My name is Amira Blake, and I've been looking closely at Iraq lately. Most people know this country for its history, its ruins, its deserts, and the kind of road trip you might have seen in that journey video from Baghdad to Babylon. And I love that part of the story. It shows Iraq's beauty. But when I started digging deeper, I realized there's another side to Iraq that most people never see: a financial story, a story of reform that could shape the country's future. And it starts with the banks. The Central Bank of Iraq made something clear. If you're going to call yourself a bank here, you can't be weak anymore. They told every bank, raise your capital. 400 billion dinars, that's about 306 million US dollars, is the target. But here's the thing. They already had to pull back on the deadline. Instead of forcing it all by 2025, they're phasing it in through 2027, letting banks add the equivalent of about $38 million per year. What does that tell me? It says too many of these banks are fragile. Some might not survive unless they merge or get absorbed. That's not a sign of strength. That's a stress test happening in real time. And then there's Raffidain, the giant state-owned bank. For decades, it's been more of a government arm than a commercial bank. But now the government wants to shrink its ownership share, cut it below 24%, and bring in private and international investors. Imagine that. One of Iraq's biggest banks going from being fully state-run to having outside ownership. That changes everything: accountability, competition, even the way customers get treated. And to force the issue, the government announced that all payments, salaries, bills, everything official have to go digital. No more cash over the counter at ministries. If you want to get paid, you go through the banking system. That's a hard push to drag millions of people into the formal financial world. But Iraq isn't just coaxing banks into shape, it's also cutting them off when they don't play by the rules. 10 banks have already been ordered into liquidation. That's not a warning, that's execution. They failed to protect depositors, failed to meet obligations, and the central bank shut them down. Imagine being a depositor, walking up to your branch one day and finding out your bank is finished. It's a shock, but it's also a signal. Iraq is finally willing to purge its weakest links. And then there's the dollar. For years, Iraqi banks depended on access to US dollars to grease trade and keep transactions flowing. But this year, 5 banks were banned outright from doing any dollar business. They're cut off until they prove they can comply with anti-money laundering standards and international rules. We're talking names like Al Mashreq Al Arabi Islamic Bank, United Bank for Investment, Al Sanam Islamic Bank, Misk Islamic Bank, and Amin Iraq for Islamic Investment and Finance. If you're on that blacklist, you're basically sidelined from the global financial game. That's punishment with teeth. But I don't just see pain here. I see the beginnings of a reset. New licenses are being given to banks that specialize in climate finance. Riyadh Bank, Al Masraf Al Akhdar, with more than 763 million US dollars lined up for renewable projects and green loans. That's not the Iraq of yesterday. That's Iraq trying to tap into ESG money, the global flow of capital chasing sustainability. And it goes further. There's a national strategy now, running from 2025 to 2029, to bring more Iraqis into the banking system. Financial inclusion, the kind of language you usually hear at IMF conferences, is suddenly policy in Baghdad. They want women with accounts, small shops with POS terminals, farmers paid through the Agricultural Cooperative Bank instead of cash under the table. It's a slow revolution, but a real one. So where does this leave the everyday banks you don't often hear about? Gulf Commercial Bank, Iraqi Islamic Bank, Rashid Bank, even small microfinance outfits, they're all being forced to decide: upgrade or disappear. Compliance, governance, digital systems, those aren't suggestions anymore. They're survival rules. And for investors like us, watching from outside, the question is obvious: who makes it through this fire, and who gets burned up in it? That's the Iraq I want you to see. Not just ruins in history, but a system being torn down and rebuilt in real time. If these reforms hold, Iraq could emerge with a banking sector strong enough to carry the economy forward. If they fail, it's back to instability and lost opportunities. That's why I'll keep following it closely, because this financial story could be the foundation for Iraq's next chapter. When I think about Iraq's reforms, It's not just the cleanup at home that matters. It's about how Iraq reconnects with the outside world. Because a bank here isn't worth much if it can't send money abroad, open letters of credit, or tap into the dollar system. That's where correspondent banking comes in. Those relationships let an Iraqi bank move money across borders, and right now, only a handful of them are trusted enough to do that. The rest, either restricted or locked out entirely. So the central bank has turned this into a carrot and stick game. If you raise your capital, if you prove your books are clean, if you follow international rules, you get your reward, your correspondent account back. That means you can move goods, trade internationally, and rejoin global finance. For banks still on the outside, every day feels like financial quarantine. And this isn't just about the banks themselves. Foreign investors are watching. Iraq's government knows the country can't run forever on oil money alone. They've been changing investment laws, making it easier for foreign companies to set up, operate, and repatriate profits. That might sound technical, but the impact is huge. In the old days, investors often felt trapped once their money was inside Iraq. Now, they're being told they can get it back out if they follow the rules. That changes confidence, and confidence changes everything. Non-bank companies feel this too. If you're a foreign manufacturer eyeing Iraq's market, you don't just want a license. You want banks that can handle your transactions, issue loans, process your payroll, and move your profits back home. That's why these reforms ripple outward. Banking reform is the foundation for corporate reform. One without the other doesn't stand. And Iraq isn't only playing defense, it's trying to build new lanes of opportunity. Two banks, Riyadh Bank and Al Masraf Al Akhdar, have been licensed specifically for climate finance. Together, they've launched more than 763 million US dollars for renewable energy projects, environmental loans, and green infrastructure. That's Iraq saying, we want our piece of the global capital chasing sustainability. If they succeed, they can start attracting a very different kind of investor, the ones looking for ESG opportunities instead of just oil and construction. That's where the potential multiplies. An Iraqi agribusiness that today struggles to finance irrigation could, with green banking, borrow to install solar pumps, climate-resilient seed storage, or energy-efficient facilities. That doesn't just modernize one company, it raises the standard for an entire sector. This is why banking reform is bigger than banks. It reshapes the economy itself. But let's be real. Not every player in this system wants reform. Many of Iraq's private banks are family-owned, with roots deep in politics and tradition. Some don't want to open their books, show their real numbers, or allow outside shareholders to step in. They've lived for years on easy profits from currency spreads or government contracts. And now the central bank is standing over them saying, those days are done. Comply or vanish. That's the battle line in Iraq's banking sector right now. Reformers on one side, entrenched interests on the other. Consultants like Oliver Wyman are in the mix, pushing audits, restructuring, even forced mergers. The old guard pushes back, wanting to protect their turf. And the outcome of that tug of war will decide whether Iraq ends up with a banking system that's investable or one that collapses under its own contradictions. If you're an investor listening, the real question becomes, do you take a position now, betting on a fragile bank that might emerge stronger after the purge? Or do you wait, let the weaker ones fail, and then move in once the smoke clears? That's the kind of call that separates cautious money from bold money. That's why I'm watching closely. Because the winners of this round won't just be banks, they'll be the gateways for all other business in Iraq. And when a gateway opens, you'd better be ready to step through it. One of the most powerful shifts happening in Iraq right now isn't even about capital requirements or liquidations. It's about how money actually moves. For decades, Iraq has been a cash-heavy society. Salaries handed out in envelopes, bills paid in person, small shops keeping stacks of notes under the counter. But reforms are pushing that system into the digital age. And once people cross that bridge, there's no going back. The government made it mandatory. No more cash payments at ministries. If you're getting a salary, a pension, or any government fee, it has to go through a bank or an electronic channel. That's more than just a rule. It's a cultural shift. Overnight, millions of Iraqis who never dealt with banks are being forced to open accounts, get cards, and start trusting digital systems. For the banks, this is both an opportunity and a test. And then there's the payments infrastructure itself. The central bank has been licensing electronic payment companies, expanding point of sale terminals, and rolling out digital wallet systems. Think about it. A corner store in Basra can suddenly accept card payments. A farmer in Diyala can receive subsidies directly to an account instead of cash under the table. That changes how people interact with money, but it also builds data. Banks and regulators finally start to see how money flows, who spends what, and where opportunities lie. To make this stick, Iraq launched a financial inclusion strategy running from 2025 to 2029. The goal is simple: get more Iraqis into the financial system. Today, a large portion of adults still don't have bank accounts. Many women are excluded from banking altogether. By pushing inclusion, Iraq is trying to reduce that gap, bring more people into the formal economy, and ultimately grow the pool of savers, borrowers, and investors. That's how you deepen a financial system. Microfinance and fintech companies are key here. They can reach people the big banks ignore. Small loans for traders, digital wallets for street vendors, mobile payments for young people who've never touched a branch office. This opens up a new frontier. And when I look at it as an investor, I don't just see financial access. I see untapped markets. Millions of people ready to become customers once the tools are in their hands. But the risks are real. Iraq doesn't yet have the same cybersecurity infrastructure as advanced economies. Digital fraud, data privacy, and technical failures could erode trust if they aren't handled properly. And let's be honest, trust is already fragile. Many Iraqis don't trust banks because of years of mismanagement, scandals, and instability. If digital systems fail them even once, they might go right back to cash. Still, the payoff is huge. A digital economy creates efficiency, lowers transaction costs, and draws more money into the taxable, visible system. It also sets the stage for future innovations: mobile banking apps, online lending, even capital markets that ordinary Iraqis can access. And for the international community, it makes Iraq look more like a modern economy, not one stuck in the past. So, while the capital rules and liquidations grab headlines, it's these quieter reforms, the digital push, the inclusion agenda, that might prove to be the most transformative. Because once people get used to tapping a card instead of counting out bills, Iraq's entire relationship with money shifts. And with it, the possibilities for growth. That's why I call this the invisible revolution. It doesn't make for dramatic headlines, but it could be the change that lays the foundation for everything else Iraq wants to achieve. And if you're thinking about the future here, you can't afford to ignore it. When you strip away the technical details of reform, what Iraq is really doing is a governance reset. For too long, too many banks operated as private family businesses that just happened to have a banking license. Some were built on connections, not credibility. That's why governance, transparency, and compliance have become the new battleground. The central bank isn't leaving this vague. It's demanding stronger boards, tighter audits, and transparency in financial reporting. And the big hammer behind all of it is anti-money laundering. Iraq has been under pressure from the international community to clean up its banking system, to stop shadow transactions, and to prove it can run a financial sector that meets global standards. The US dollar bans are the clearest example. When 5 banks were stripped of their right to deal in dollars, it wasn't just a technical penalty. It was a public humiliation. It told the market, if you play games, if you skirt compliance, you're out. And for any bank in Iraq, losing access to dollars is like losing oxygen. It suffocates your business, cuts off trade finance, and scares away customers. But here's the twist. Not every bank is resisting. Some see compliance as their ticket forward. The stronger private banks are using this moment to invest in systems, hire compliance officers, and market themselves as the clean choice. That's a bold play, because if they can convince both the central bank and foreign partners that they're trustworthy, they'll inherit the business left behind by the failures. In finance, survival isn't just about holding on. It's about taking share when your rivals stumble. Still, many are dragging their feet. Old guard banks with deep family roots often prefer to wait it out, betting that the central bank won't follow through. But so far, 10 liquidations have proven that bluff wrong. Every liquidation is a warning shot, a reminder that the rules aren't optional anymore. Think about what this means for Iraq's reputation. Investors have long worried that Iraqi banks can't be trusted with transparency. If reforms succeed, that stigma starts to fade. If they fail, it deepens. That's why Oliver Wyman and other consultants were brought in, not just to restructure balance sheets, but to force international credibility onto the system. And here's the question that lingers in my mind. Will the majority of Iraq's private banks embrace governance, or will they gamble on resistance until the very end? Because if history teaches us anything, reform is never just about rules on paper. It's about enforcement, consistency, and the willingness to punish when punishment is due. That's the choice sitting in front of Iraq's financial sector right now. Conform and grow, or resist and risk being erased. And if you're looking at Iraq from the outside, that choice should tell you who to trust and who to avoid. When I look at Iraq's banking reforms, one of the boldest steps has been liquidation. It's not talk, it's action. 10 banks have already been ordered shut, their licenses pulled, their depositors forced to find new homes for their money. That's not easy to watch, but it tells me Iraq is finally willing to take pain today to prevent collapse tomorrow. And in a country where banks once survived just by having the right connections, that's a revolution in itself. But liquidation is only one side of the story. The other is consolidation. When weaker banks fall, stronger ones have the chance to step in, absorb customers, and expand market share. That's what makes this moment dangerous and full of opportunity at the same time. A Gulf commercial bank, for example, that manages to stay clean and capitalized can inherit the business left behind when a smaller competitor goes under. Suddenly, you're looking at a reshaped landscape. Fewer banks, but stronger ones. And then you've got the state banks. Rashid is a perfect example. It's been a massive government-owned institution, but now it's under pressure to operate more like a commercial entity. That means cutting political interference, improving balance sheets, and adopting international standards. It also means competing, something Rashid hasn't really had to do for decades. If Rashid can make the leap, it could anchor the system. If it fails, it risks dragging the credibility of reforms down with it. The Agricultural Cooperative Bank is another case. For years, it's been more like a government fund, pushing loans out to farmers, often without much repayment discipline. But now it too has to meet capital standards, improve governance, and digitize its lending systems. Why? Because agriculture isn't just a side story in Iraq, it's a backbone. Reforming how farmers get financed could ripple across the entire economy, improving food security and rural livelihoods, while giving banks a bigger role outside the cities. This is the logic of reform. Prune the weak, strengthen the core, and then let the survivors compete in a cleaner system. But that's easier said than done. Consolidation requires trust. Customers need to believe their money is safe when their old bank disappears and they move into a new one. If confidence cracks at that point, the whole system could face a run. That's why the central bank has to walk a fine line. Purge fast enough to show seriousness, but manage the fallout carefully so the public doesn't panic. For investors, the consolidation phase is one of the most important to watch. When the dust settles, you don't want to be stuck with a bank that's gone or going. You want to spot the survivors early, the ones that pick up clients, grow stronger balance sheets, and regain correspondent banking privileges. Those are the institutions that could anchor Iraq's financial future. So, liquidation isn't the end of the story. It's the beginning of a reset. And if Iraq plays this right, the banks that survive will emerge not just bigger, but more credible, capable of finally supporting the country's growth instead of dragging it down. When people think about Iraq's economy, they often think oil and nothing else. But if you look closely at what's happening right now, you'll see that the reforms in the banking sector are meant to open the door for something much bigger: foreign investment across multiple industries. The message from Iraq's leadership is simple. If the banking system can be cleaned up, outside capital will have a safe place to land. That's why the central bank and the government are moving in lockstep. Investment laws have been rewritten, so companies can more easily register, operate, and even repatriate their profits. And when you connect that with reforms in banking, it suddenly becomes realistic for international firms to see Iraq not as a black hole, but as a growth market. We're already seeing this in the way partnerships are being negotiated. Energy is still the centerpiece, of course. Iraq has one of the world's largest reserves of crude oil, and global firms are eager to be involved. But banking reform makes it easier for contracts to be financed, payments to be secured, and revenue to flow transparently. Without that foundation, even the best energy deals risk stalling. Telecom is another example. Iraq has a young, tech savvy population hungry for better connectivity. Foreign telecom operators and infrastructure investors have circled the market for years, but hesitated because the financial system was too shaky. With reforms, those barriers start to fall. The same goes for construction and housing, sectors desperate for international capital, but dependent on banks that can handle large-scale financing. This is where Iraq's broader reforms show their power. Imagine a multinational construction company wanting to build housing in Baghdad or Basra. Without reliable banks, they'd struggle to move money, pay workers, or secure loans. But as banks become more compliant and better capitalized, 400 billion dinars, about 306 million US dollars, as the new threshold shows, those companies gain confidence that their investments won't be trapped in a broken system. And foreign governments are watching too. The IMF and World Bank have both emphasized that Iraq's credibility depends on these reforms sticking. If they do, billions in development finance and direct investment could pour in. If they don't, investors will keep their distance. What excites me is how this could ripple out beyond oil. Agriculture could finally modernize if foreign investors partner with local banks to fund irrigation, storage, and supply chains. Tourism, still small but with massive potential, could attract capital once visitors can pay with cards, book hotels online, and move money safely. Even technology startups could find investors, as long as the financial rails are strong enough to support growth. So when I watch these reforms, I don't just see banks fighting for survival. I see Iraq laying the tracks for a broader investment story. If they succeed, the country could evolve from an oil-dependent economy into a diversified market that attracts global money across multiple industries. If they fail, Iraq risks being stuck at square one, cash-based, opaque, and cut off from the growth it desperately needs. That's why I call this the pivot point, because right now, Iraq's reputation is changing, and in global markets, reputation is currency. If Iraq proves itself, the capital will follow. Every time I study Iraq's banking reforms, I feel the weight of the risks pressing against the progress. Because on paper, the reforms look strong. Higher capital requirements, liquidations, digitization, inclusion. But reform in Iraq has never been just about the technical steps. It's always been about politics and governance. And that's where things get messy. Corruption is still one of the biggest threats. Too many officials, too many business owners, too many insiders still see the banking system as a way to extract, not to build. Kickbacks, inflated contracts, loans that never get repaid. These are the habits of decades. Even the best reform blueprint can crack if enforcement isn't relentless. And investors know this. When foreign capital looks at Iraq, it doesn't just measure return, it measures trust. If corruption continues unchecked, no amount of capital requirements will restore confidence. Then there's political instability. Iraq's governments have turned over quickly, and priorities shift with each administration. One leader pushes reforms, the next might slow them down. That uncertainty filters into everything: laws, contracts, and banking oversight. For reforms to stick, they need more than policy. They need continuity. They need a commitment that outlives one political cycle. Without that, reforms risk becoming a patchwork of half-finished promises. Security is another wild card. Investors don't forget the past 20 years of conflict, and even though the situation has improved, the risk of flare-ups still lingers. A single crisis can freeze capital, scare depositors, and stall banking momentum. Stability isn't just a background factor, it's the oxygen reforms need to survive. And then there's governance within the banks themselves. It's not enough to have new rules. Boards and managers need to live them. Family-owned banks with long histories of secrecy may resist true transparency. State banks like Rashid or Agricultural might still fall back into political interference if oversight weakens. The culture inside these institutions has to evolve, and culture doesn't change overnight. That's why international partners like the IMF and Oliver Wyman keep stressing the same thing: enforcement, enforcement, enforcement. Because if Iraq cracks down once, but not the second time, trust evaporates. If it lets one insider bank off the hook while punishing another, credibility collapses. And without credibility, no reform can hold. So when I look at Iraq's financial future, I see a fork in the road. One path is discipline, sticking to reforms despite the corruption, the politics, the resistance. The other path is backsliding, letting old habits creep in until the reforms are hollow. And history tells us both paths are possible. That's why investors have to ask, is Iraq truly breaking from its past, or just repainting the surface? That's not a rhetorical question. It's the one that determines whether billions in capital flow in or billions stay parked on the sidelines. When I imagine the upside of these reforms, I see a very different Iraq than the one most people picture today. If the banking sector makes it through this fire, raising capital, cleaning up governance, embracing digital payments, and reconnecting with the world, Iraq could flip its reputation from fragile to formidable. Think about what happens if the survivors come out stronger. A private bank that meets the 400 billion dinar threshold, about 306 million US dollars, suddenly isn't just keeping its doors open. It's proving to regulators, to international partners, and to investors that it can play by global rules. That gives it access to correspondent banking, dollar flows, and credibility with customers who used to keep cash under their mattresses. Foreign investors respond to that kind of stability. The first wave is cautious: a telecom company, a construction firm, maybe a regional agribusiness testing the waters. But once they see contracts honored, payments processed, and profits repatriated without delay, more capital follows. And every new investor that succeeds makes the next one braver. That's how momentum builds. On the domestic side, Iraq's economy becomes more connected. Farmers financed through the Agricultural Cooperative Bank can modernize their equipment. Small shops accepting digital payments generate transaction records that make them eligible for microloans. Families with savings accounts start thinking about mortgages or small business loans. Step by step, the economy formalizes, and that brings efficiency, accountability, and growth. And don't underestimate the ripple effects. If Iraq's banks can finally operate at global standards, the country can start positioning itself as a regional financial hub. Baghdad or Basra won't replace Dubai overnight, but imagine Iraq becoming a bridge between Gulf investors, Asian manufacturers, and European energy firms. Geography matters, and Iraq sits at the crossroads of some of the world's most important trade corridors. There's also the green finance angle. If Riyadh Bank and Al Masraf Al Akhdar prove that renewable energy loans can work here, Iraq could tap into billions in ESG funds looking for emerging market opportunities. That could fund solar fields in the desert, energy-efficient housing, or climate-resilient agriculture, all of which make the economy less dependent on oil and more resilient to shocks. So the upside isn't small. It's transformative. Iraq could move from being a country investors avoid to one they actively seek out. It could shift from cash-based transactions to a diversified, modern financial system. And it could give its people a future where banking isn't just for the connected few, but for every citizen. That's the promise of these reforms. It won't happen overnight, and it won't happen without resistance. But if Iraq follows through, the payoff could be a financial system strong enough to support growth, attract investment, and finally put the country on the global economic map. That's the Iraq I picture, not just recovering from its past, but stepping forward into something new. A place where opportunity flows through banks that once struggled, and where reforms lay the foundation for a future bigger than anyone expected. Imagine Iraq in 10 years, if these reforms don't just stick, but take root. Picture walking into a branch of Rashid Bank or Rafadain in 2035, and instead of long paper queues and cash-filled windows, you see sleek digital kiosks, mobile bankers helping clients on tablets, and international investors sitting in glass offices upstairs. That's the Iraq we could see if reform becomes reality. Banks that once scraped by are now holding more than 400 billion dinars in capital, about 306 million US dollars, as a minimum. And instead of being fragile, they're competing for global partnerships. Private banks that survived the consolidation wave could now be the anchors of Iraq's financial system, trusted enough to connect with global clearinghouses, and strong enough to handle foreign capital flows without panic. Imagine if those climate finance initiatives grow beyond their early 763 million US dollar base. By 2035, Iraq could be funding solar energy fields across the desert, electrifying rural towns, and exporting renewable power to its neighbors. The green finance banks, once an experiment, could be leaders in regional sustainability lending, channeling billions instead of millions. Think about agriculture. Instead of farmers waiting on irregular government subsidies, they could be financed through digital loans, tied to mobile wallets, with repayment based on harvest cycles. That would modernize food production, improve exports, and cut down on waste. It could also transform rural communities by connecting them directly to the financial system for the first time. Tourism could be another beneficiary. With banks that process payments seamlessly, Iraq could open its doors wider to the world. Pilgrims visiting Najaf or Karbala could pay by card. Travelers drawn to Babylon or Mosul could book hotels online without fear. A tourism industry supported by stable finance could bring in billions every year, diversifying the economy and creating jobs beyond oil. And then there's the image of Iraq itself. Instead of being seen as a fragile state, it could be seen as a frontier market that finally made the leap. A place where investors from Europe, Asia, and the Gulf all compete to set up operations. A place where the banking sector isn't an obstacle, but a selling point. That kind of perception shift can change everything. Reputation attracts capital, capital fuels growth, and growth feeds stability. Of course, this is the imagine if scenario. Nothing about it is guaranteed. But when I look at the trajectory, I see the possibility. Iraq has the resources, the geography, and the human capital. What it needed was discipline and finance. If it holds the line, the next 10 years could rewrite its economic story, not just for banks, but for the whole country. That's the future worth picturing. An Iraq where financial reform doesn't just fix problems, but sparks an era of opportunity that once seemed impossible. We've traveled a long road in this conversation, from fragile private banks struggling to raise capital, to state banks like Rafadain and Rashid being pushed into the modern era, to liquidations, dollar bans, and the rise of green finance. We've seen how digital payments and financial inclusion could quietly transform Iraq's relationship with money, and how correspondent banking and international partnerships could reconnect Iraq to the world. We've talked about the risks, corruption, politics, instability, and we've also imagined the upside. A decade from now, an Iraq where banking reforms succeed, investment flows, and the country finally takes its place as a financial hub at the crossroads of the Middle East. That's what makes this moment so powerful. Because right now, the system is being torn down and rebuilt at the same time. Old habits are being purged, new standards are being enforced, and every bank is being forced to choose, adapt or vanish. That's painful, but it's also the kind of discipline Iraq has needed for years. And for those of us watching, it's more than just numbers. 400 billion dinars, about 306 million US dollars, isn't just a capital requirement, it's a line in the sand. 10 liquidated banks aren't just casualties, they're signals. Every step Iraq takes either builds trust or erodes it. And trust is the real currency here. So if these reforms stick, Iraq could emerge not just stronger, but transformed. A country once defined by instability could become one defined by opportunity. If they fail, the old cycle returns. But right now, for the first time in years, I see a chance that Iraq is serious about breaking that cycle. That's why I'll keep following these reforms closely. Because this isn't just about banking, it's about the foundation of a nation's future. And if Iraq gets this right, we could be looking back years from now and saying, that was the moment when everything started to change.